we'll go ahead and get started. And as other people join, they can just join in with us. Thanks for attending our renovation loan session today here at Fairway. And today we have Ashley Pisaturo with us, and she is in the renovation department here at Fairway. She's been working in our renovation department, actually started it with her boss about 9 years ago. So she's extremely experienced on this topic. And she has a really great presentation to present to you today. What we're going to be talking about are the different types of renovation loans that are available for you all to use. And renovation loans are a lot easier than people think. They are not the construction to permanent loans that you hear about, where a lot of times you have big additions or tear downs. These are loans where you can have buyers, do some kitchen updates, bathroom updates, put decks on properties, finish basements, things of that nature. So there's some things that you can use here that might turn some buyers into buyers of homes they didn't think they were going to be interested in. And then also as listing agents, if you have properties that have maybe less than desirable features to those properties, you would be able to possibly market that to a buyer that could come in and make some of those updates to their liking. So with that being said, I'm just going to go ahead and turn it over to Ashley and let her go ahead and start her presentation.
Thank you, Leslie, for the wonderful introduction. I don't have to introduce myself now, but thank you all for joining. As Leslie said, I'll be going over what a renovation loan is, some of our products. I'll be open for some questions after the slideshow as well. So if you guys have any questions, please feel free to leave them to the end. I'm going to go ahead and turn off my camera while I present. And then let me know when you guys can see my screen.
We can.
Perfect. Alrighty, this is just an important notice that all pre-qualifications must be fully underwritten. So just make sure that you are getting with your loan officer on pre-qualification and submission of the loan file. So what is a renovation loan? I'm just going to ask how many agents on here have some homes on their market that have been sitting there for over 30 days. Anyone in here have some homes been sitting on their market? I'm sure you have. Renovation loans allow the borrower to purchase or refinance a home to include the cost of repairs all into one transaction. That means we have one fixed rate. Our appraisal will be ordered as subject to the repairs that will be completed post-close, and funds will be dispersed post-close as well upon completed inspections of the file. Renovation loans can offer solutions when properties have a low appraised value, outdated properties that may need cosmetic finishes, significant repairs that do not meet minimum property standards, even homes that do meet minimum property standards but may not have the borrower's wants or needs can qualify as a renovation loan. Renovation loans can even be a solution when borrowers do not have the ability to finance the repairs themselves. Now for your buyer's benefits, some pluses for your buyer is that they can capitalize on the current market inventory regardless of property condition. They can now consider homes that are typically avoided. If your borrower does not have the funds in their bank accounts to cover the repairs, who wants to use credit cards and have outrageous interest on those to pay for any repairs? Our products offer low down payment options. And keep in mind that the down payment is calculated based off of our sales contract plus our renovation budget, which I'll go over in the next slide. Some of our low payment options, we do have a 3% conventional product. For first-time home buyers, we can go as little as 3% down. We have our FHA products that are 3.5% down. We even offer a VA renovation product that is 0% down. And FHA also has a HUD $100 down program that we have as well. And like I said, all of these products are single transaction. This will include the purchase and the renovation costs, and the repairs will be completed post-closing. So there's not going to be any surprises to their mortgage payment, and the borrower is going to be earning immediate equity. Now, in these next couple of slides, I'm just going to be going over what a pre-qualification looks like and what this means for your buyer. In this example that we have here, this is an FHA 203K example, and we have a borrower that is approved for $600,000. They have found a home. The list price is $500,000. So this means the borrower now has a budget of $100,000 to upgrade the home. Now, I want to go over what this $100,000 alterations look like, because this is not just going to include the labor and material on our contractor's bid, but this is also going to include any soft costs, such as our inspection fees, any title updates, any permits that are going to be required for the scope of work. This can all be financed into the loan. We also finance what is called a contingency reserve. I like to call this our emergency fund. So for any surprises that unfortunately do happen post-close, whether it's knocking down a wall and finding something that needs to be repaired, or cost of materials increasing, we do see that inflation a lot. That is what the contingency is used for. Typically, we do finance a 10 to 15% contingency in our products, depending on if utilities are on or off in the property. Another great plus about these products is that we can also allow, as long as the value supports, the borrower can finance up to 12 months of mortgage payments on some of the products. Now, what this means is when a borrower is displaced during the renovation, if they're doing a very large project, like adding an addition, or they're doing the kitchen where they won't have livable space and they have to either rent, go to an Airbnb, maybe a hotel, the renovation product will allow them to finance their mortgage payments into the loan, and Fairway's Draw Team will actually make those payments for the borrower so they do not have the stress of it post-closing during the renovation, which is another huge plus. So going back to our breakdown here, we have our overall total acquisition of 600,000. We're going to multiply that by the 96.5%, the 3.5% down payment, giving us our total loan amount of 579,000. In this next example, same thing, but this is our home style purchase transaction. In this example, borrower is a first-time home buyer, so we can go up to that 97% LTV, giving us our max loan amount of 582,000. And again, here's just a VA one where we can finance 100% LTV, giving us that loan amount at 600,000. These next couple slides, I'm going to go over the type of products that we have and what those do offer. On this slide, these are our FHA options. For our first one, we do have our 203K standard product. This does allow for structural and major work. Renovation costs can exceed $75,000. We do just have to have a minimum of at least $5,000 in repairs. We do not have a cap on the renovation budget, but we do have to stay within FHA loan limits. HUD consultant, any contractor is required. And again, this is where the borrower can finance up to those 12 months of mortgage payments with this product. Now on our limited loan, these repairs are typically for cosmetic and non-structural work. The total renovation budget cannot exceed more than $75,000. This was a recent change that FHA came out with past November. Previously, they would only allow up to $35,000 in repairs. So this was a huge win and a huge jump in FHA's eyes. So we were super excited to see this change. No minimum dollar amount for repairs. Limited K loans do not require a HUD consultant, but if the borrower would like to finance one, they are able to do so, and mortgage payments cannot be financed into the limited K loan. Now for the USDA products, they're going to feel very similar to our FHA products. However, USDA is not quite ready to have those increased repairs. So we're still going to be capped at that $35,000 minimum of $5,000 in repairs, no cap on that renovation budget. The HUD consultant and contractor are required. And on the USDA standard, borrower can only finance up to 6 months of mortgage payments. Now for the USDA limited, again, this is where we're still capped at that $35,000, but USDA should be making this change within the next month or so. So be on the lookout for any bulletins and newsletters from me very soon. Now, one of my favorite products is our VA renovation product. This also went through a recent change Previously, we could only allow $50,000 in repairs. We now allow $75,000 as long as they are minor and cosmetic in nature. All repairs must be completed within 120 days, so that is super important. Borrower cannot be displaced from the home for more than 15 days during the renovation period. Only one contractor should be employed. And I apologize, but this last bullet point should be removed. Contractors no longer need a VA builder identification. This was another recent change that happened back in March, which is another huge win. Takes some time out of getting our contractor approved. So that's great news. Our home style and choice product. This is probably our, I don't want to say most important, but it's probably our most used product. Is probably about 50% of our product mix is our home style and choice products. This does allow a borrower to make repairs that are going to be permanently affixed to the property. Second homes and one unit investment properties are eligible. Home style even allows the completion of new construction homes as long as they are 90% complete. Both structural and non-structural repairs are eligible. HUD consultants are not required, which is another reason why Homestyle is such a great choice, is that we don't have to have another third-party person come into the transaction to oversee. That is not needed on these products. The repairs cannot exceed 75%, the lesser of our total acquisition, which is that purchase price plus our total reno, or whatever the after improved value is, so whichever is less. Now here, I'm not going to spend too much time on this because you guys will get a copy of this slide deck and you will have this information to you, but this is just a comparison chart of all of the products that Fairway does offer. You will be able to see at a glance what best fit is for your borrower, depending on a time frame of completion time, depending on their budget, and what type of repairs the property is needing as well. Here are some eligible property types. Some single family residents we are able to do. Manufactured homes we can renovate as long as they are double wide and permanently affixed to the property. We can renovate multifamily owner occupied 2 to 4 units. Second homes, rental, and investment properties are all eligible. And these are some just common repairs that we do see. They are not all, but I just wanted to go over some of the ones that we often see. Those do include new kitchen, bath, roof, heating system. If they're installing or repairing well, a lot of times we'll see, especially in the Northeast region where septics fail, Title V. So we do have to go in there and install a new septic system. We oftentimes see that people need to expand their living space. Maybe they don't want to leave, but they need to make their home a little bit bigger, whether they're adding a room, adding an ADU, whether their children have to stay with them, and or maybe they have parents that need to live with them. We see this often where they're building ADUs for multi-generational living. Any health and safety issues such as asbestos, shipping and peeling paint, mold, pest infestation can all be included in the renovation budget as well. If you need to make repairs to foundation, even installing a new ground pool, making a backyard oasis is eligible on these renovation products. Some ineligible repairs. Complete teardown and rebuilds are not allowed. Self-help and DIY work is not allowed. So we do get this question a lot. Can my borrower be the contractor? At this time, unfortunately, no. We could take a look at some examples as an exception basis, but for the most part, we like to make sure that we are getting licensed contractors to take on these projects. Here again, structural repairs to manufactured homes would not be eligible, and improvements for business and commercial purposes would not be eligible. And I apologize, but I was supposed to take out those slides, so I apologize, those got in there. At my top tips for a successful loan process: understanding costs at pre-approval stage, just ensuring that you understand that the amount the borrower is pre-approved for. Buyers should begin the process of thinking about contractors, identifying desired repairs and improvements for the project. Contractor preparation. Fairway has created a lot of resources for our contractors, including the templates that can quickly allow us to order the appraisals on these files quicker. So when you have one in place, please reach out to your local loan officers to see how we can get ahead of these renovation transactions. We even offer pre-approving contractors. So if you have a contractor in mind, we would love to get in contact with them and give them at least a preliminary needs list of their profile, any licensing, insurance, W-9s. We can go ahead and review to make sure that we can get those as best prepared as possible. And setting expectations. Typically, we like to see a 45-day close date, especially if this is your first renovation loan. We have absolutely seen those close in 30 days or less. I've even seen, Richard, you said that you've closed one in 21 days or less. So I would love to kind of hear how you prepared to get a great closing. But yes, like I said, just make sure that you're getting a great contractor that is going to be setting up the best success for you. And understanding the property, if we know that mold or there's chipping and peeling paint on the property, just make sure that you're communicating this. That way we can set the proper expectations of needs and communicate to make sure that we're staying on the right time track for closing. And leaning on rental support, we have a team of subject matter experts that I oversee that work very closely with our loan officers, processors, and underwriters to ensure that these stay on track for a quick closing. And that is all I have for you guys today. Did you have any questions for me?
You should all have the ability to unmute yourself, by the way, if you do have questions.
So I have a question. So when they get pre-approved with the lender at a certain interest rate, assuming then when they add the renovation cost, that changes the interest rate?
No, it will
No,
not.
it doesn't. Okay.
Mhm. Yep. No, we have specific rates in place for our renovation products. So if they are approved for a renovation product, that's the rate that you'll be seeing.
Okay. Okay. Thank you.
Yeah.
Looks like Kathy raised her hand. Let me see if I can unmute her.
While you're trying to unmute Kathy, Ellen, so your buyers may not know that they're going to find a home, for instance, that is going to need a renovation. So they can be pre-approved by us for any kind of a loan. But if they stumble upon a home that they see needs renovations, some minor renovations or maybe some major ones, and they want to pursue that, they've already been pre-approved. We'll look at that as a renovation loan because we'll have to just restructure the loan. And as Ashley had mentioned, the renovation loan products, they have their own interest rates, but interest rates fluctuate every day. So if somebody's pre-approved today, that same person tomorrow or the next day is going to probably be, looking at a different interest rate, whether it's better or worse. So anyway, just relatively speaking, though, the renovation products, depending on if it's FHA, VA, or conventional, it's just going to be what those rates are.
Got it. Okay. Thank you. That makes sense.
Kathy.
And Ashley, I know this is a pretty important piece too. Can you go over, I guess, the appraisal process? I guess when the appraisal can get ordered, what happens if it comes in lower than expected, et cetera?
Yes, great questions. So our team has to give the okay for branches to order the appraisal. And what our team is looking for on our scope of work is making sure that we have labor and material broken out. We like to make sure that we have good details. So some things that we don't like to see on our bids is oftentimes we see contractors just say plumbing, and $15,000 worth of plumbing. Well, what does that mean? That could mean so many different things. So we like to know what's going on in the property. We also like to know the location of where it's happening. Most homes have multiple bathrooms, and if only one is being repaired, we just need to identify where the location in which bathroom is being renovated. Those are the main pieces. Now, Fairway has created bid templates for our contractors that kind of ensures that we capture all of these good details that we need. A contractor does not have to use it. It's just a tool that we heavily suggest because it does make the process go a little bit smoother when they do use our bid templates. But once we have that, I will say if they are doing a major renovation, like if they're adding an addition or the original blueprint is changing, we will require a sketch. It does not have to be stamped plans, but we do like to give the appraiser a visual of what's going to be changing in the home. These are such important details that are going to be supporting our value. So the more we can get, the better. Once we have those, we can allow the branch to order the appraisal. Now, let's say appraisal comes back and it's low. We do have some options depending on what product the borrower is in. Also, that contingency budget that I had mentioned earlier. Let's say at initial disclosures, if we disclose at that 15% contingency, we get that appraisal back, utilities are on. We can reduce that contingency. Sometimes we do see that help the buffer a little bit. Sometimes we can look at changing products. So a lot of times we will see if borrowers are approved conventional or our choice products and it comes in low. FHA has an amazing thing that a lot of loan officers don't know is an option, but FHA loans allow renovation loans to gross up the value 110% if it comes in low, and then our LTV will be based off of that grossed up value. So sometimes that also helps us when we do see shortages. Just some things to keep in mind when we do switch products. If they are major renovations, they may have to hire a HUD consultant. So you may just have to create an expectation that it just might cause a little bit of a delay having to switch products, but at least we'll still have a solution for them. So that there are a lot of things that we can take a look at. We can also connect with the contractor just to make sure they haven't already fluffed in a contingency that they're not aware that we are already accounting for. Sometimes we could look at removing repairs, but we do have to be careful with that because that could impact our value too. But at the end of the day, we do provide solutions and we try to pivot from there. Great questions, Richard. Anything else?
I do have a question from Kathy McLean. She's having a trouble unmuting herself. So she texted the question. She said, will the
Yes.
renovation loan be given to condominiums, and are these loans stipulated per states? She's in Florida.
Stipulated per states.
In other words, we can do renovation loans in all states, correct?
Yes, I think our VA product we can't do in New York, but I think all others you should not have any restrictions with your area or region. And I apologize, what was the first question again?
And just confirming that condos are eligible for these renovation products.
Yes, we can do condos as well. With condos, I will have to say we do have specific homeowners insurance requirements for condos. So just make sure that you are connecting with your loan officer to make sure that we are getting walls in coverage on our homeowners insurance when you do get condos.
Okay. And Holly has a question. She said, if the buyer changes the contractor after the sale closes, is that a problem?
It's not a problem. Obviously, it's going to cause a snag. We're going to have to get a whole new approval, but it can be done.
So, sorry, I just muted myself. So does that mean that essentially you've got to have the whole estimate in place ahead of time with a chosen contractor, so you can't so it'll be a little bit harder for kind of bidding it out, so to speak, with different people? So you've got to pretty much be in place with whoever it is, the chosen contractor, before the loan closes?
Yes, we do like to make sure that we are approving and validating the contractor that the borrower is wanting to move, to proceed with pre-close. So yes, if the borrower, if at any point is feeling like they're unsure or not happy with the current service that they're getting pre-close, we do like to make sure that we are changing contractors pre-close, because what may happen is if another contractor comes in board, their pricing may be completely different. And now we have a bid where it may not, we may have to dip into their contingency when they weren't originally planning on that. So I would just say, if have your borrower search many contractors and have them pick one. Make sure that they're getting 3 or 4 estimates, making sure their timelines are going to work for the borrower as
Yeah.
well.
That's
Um,
that's going to be the hardest part, getting with the time constraints with everything for narrowing things down in
Yeah.
the closing
I-
time. Yeah.
Yeah, I can check. Fairway does keep track of all of our approved contractors. I can see who we have in your guys' area, and I can provide the list to Leslie and Richard just to kind of provide it to you guys of who we currently have. Some of those approvals, their insurance may expire, their license has expired, so we would just need to get those updated documents from the contractor, but they are at least familiar with Fairway and our process too. So I can absolutely provide that to Richard and Leslie.
Richard,
you.
why don't you do your quick short story on the renovation loan that we did, that we were able to do in the 21-day period, and how we prepared for that and why we were able to close that one so quickly?
Sure. So we had a client that was purchasing a Airbnb rental in West Virginia, like a log cabin, and so he found the house, and luckily he already had a contractor up front before they put in the offer. So we did the pre-approval, let him know basically this is the maximum you can qualify for. So, like Ashley said, you would just back that down by however much you're going to buy the house, and then on top of that, up to that maximum, that's going to be your potential renovation budget. So the contractor knew exactly what he had to work with, and he was able to determine, okay, I want to do this, this, and this, and make sure that that was within budget. So this particular contractor had done his own renovation loans for some of his own rental properties before, so he was luckily well versed in the process. So when we sent him over the paperwork, he was able to do that super quickly, which is really helpful in terms of getting the appraisal ordered in a timely manner. So we were able to get him approved super quickly. We were able to get the appraisal ordered pretty quickly as well. So that can be a tough part if the contractor is unwilling, or is just digging their heels, or it's taking them a while to get the estimate done. Just a reminder, we are kind of bound to that approval of the contractor before we can get the appraisal ordered. So just be careful with any appraisal contingencies you put in the contract. You won't want to put that in for like 10 days, knowing that the contractor has to be approved before we can actually order it. But in this case, the appraisal came back fine. The borrower was super well qualified. So in this particular case, we wrote a 45-day contract just to play it safe, but just how everything panned out, we're able to actually close in 21 days. So it's definitely possible.
And
And
I
then-
do just, sorry, Leslie, to cut you off. I do just want to say, because Richard, you had mentioned contractor needs it to be approved, but prior to appraisal order. And I just want to say that the bid just has to be approved prior to appraisal order. Our team can still work with the contractor in the background while the appraisal is being done, working on anything that they may have missed in their welcome packet, or if we're still trying to obtain insurance from them. All that can be done while the appraisal is, being worked on in the background. So I just wanted to clarify that.
Thanks for clarifying.
Yeah, that's great. Now, from a listing agent standpoint, if a listing agent has a property that, has some less than desirable features, and, the sellers are older, they're just not going to be able to make, repairs and so forth. But anybody who walks into that house might say, oh gosh, we're going to have to, update this house, maybe a room or two, or maybe the whole house. We'll need, like new floors, new kitchen, new bath, whatever. What can a listing agent do in terms of maybe some tips for writing that into their listing, or how to present that to a buyer's agent or buyers that
Yeah.
might walk in?
Yeah. Oftentimes, you could go on to Zillow right now and see a ton of homes that have been sitting on the market, and a lot of them are listed as cash only or sold as is. I hardly ever see any listings being presented as you can finance renovations, or if you're wanting to update this bathroom but you don't have the funds to do it, contact me to find out how we can finance those repairs, or updating that bathroom, or even updating the kitchen and bathrooms to sell homes. So if something's outdated, I think you are doing a disservice to yourself, not saying that this could also be renovated and your borrower could potentially finance these into the loan. Just a leaving a little trinkle in your listing is just going to open those conversations and open opportunities. And a lot of times we hear from loan officers that even though they have those renovation discussions with the listing, and most times it may not end up as a renovation loan, but it just opens the doors to that loan officer of what we offer. Fairway has, not just renovation, but lots of solutions. So it's just a door opener, a great door opener.
And we do also have the ability to create custom listing flyers illustrating renovation options. So keep that in mind. If you do have a listing coming up and you want a custom flyer, just reach out to us. We're happy to put one together for you.
Even post closing, like when the renovations are taking place, we even have yard signs that you could put in there. Under renovation, contact me, to see how you can renovate your home. We have lots of things to offer just to create conversations.
That's great. Well, we are over our time by a few minutes. So are there any other questions right now that anybody has or needs to have answered? Okay, so what I would say is thank you all for attending. Ashley, thank you so much. This was so helpful, so informative. And Richard and I are here, and Ashley as well, for anybody who needs any help with a listing or buyers. And we would be happy to walk you through this program if you need it for something that you have.
Yeah, oftentimes I get sent links asking if, my opinion on if this home would be a good candidate for renovation. So if you have something like that and you want us to take a look, I would love to do that for you guys.
Thank you. Thank you.
But thank you for having me. It was so good chatting with you guys.
Yeah, thank you,
Thank you,
Ashley.
Ashley. Thank you, everybody.
And
Bye. Thank you.
Bye-bye.